Alright, hope everyone's doing well tonight. I wanted to answer Betty's question real quick, and he's asking about April the 1st, and, well, he's asking for an opinion on bars 1 through 5. So, if we look at it, I want to just get rid of all these drawings and just kind of start from the beginning real quick. First thing we notice, and it really doesn't matter if, you wouldn't really notice this on the daily session. I'm gonna come right back to the other session. I just want to see, maybe there's no, I mean not really. So anyways, we'll just go with the Globex session because that's how you had your chart formatted. First thing I see with this is you call it a channel, bull channel, bear flag. The first thing I would wonder about is this, a measured move based on this spike down, in which we obviously went well below that. Next thing, maybe this, still below it. So the next thing I would think about is, what about this bull breakout? We have a bull breakout of above a channel, so we'll probably get a measured move based upon up or down, so in one direction or the other. And if you look, well, we pretty much, here, let me fix that, there we go. It took us to the low. The measured move down takes you to 39.75. The low of the day was 39.75. So really, it's hard to see on a 5-minute, but if you went to something like a 15-minute, it's probably more clear. Okay, so here we go. You call it. Let's zoom out. We've got a big up, big down, trading range, price action. We have a bear spike following a bear channel, so the odds are we'll probably, if it's a trading range, this is probably exhaustion, and we'll probably at least get a little bit above here, which you can see we went, I believe, I don't know if we went above it, 650. Yeah, okay, so we went one tick above this high and sold off. So, two ways you look at it is, and this is a 15-minute chart, by the way. I don't. Anyways, we'll go back to 5-minute. All I was going to say is, the bulls did enough by going one tick above to prove it was a trading range and not a bear trend by definition, or a bear channel. Bear trend, bear channel, I still see it as the same thing. So let's just go to the second, and here we get an idea, or even the third. Point is, the bulls were able to establish a trading range. And did the bears get follow through on this? Who knows? Anyways, where I'm getting at though is simply this. We're getting a bear flag. The bears see this as a bear flag. 3 pushes. The bulls want a bull breakout of this. Maybe something like that. That's not the point. Point is, we're getting a bear flag. Bulls want to break out of bear flag, and a trend reversal. They want to get above here. The best bull bars of this rally. So we have to think it might be exhaustion. Here we had a measuring gap, so maybe from here to here. And then maybe from somewhere to here. We didn't reach it. So, point is, gaps are closing, bull gaps, this gap stayed open, so we get a strong breakout. Odds are we'll get a second leg. However, if it's a trading range, we may not get the second leg until we get next to this gap. So a logical place for price to pull back would be this gap because it's trading range. Anyways, because of the bull spike, the odds are we'll get a measured move in one direction or the other. So either a measured move up or a measured move down. And as you can see, we got the measured move down. Bears here wanted a double top, and they got it. So let's recap that on the 5 minute real quick. Oh, anyways, I'll get too sidetracked there. This is, another thing I like to look at. Okay, so bull trend, we got a possible final flag, a triangle, 50% of breakouts fail, we sold off, pulled back into the triangle. Now what's interesting here, think about it from the bulls. If you bought this low and scaled in lower, you could have gotten out as long as you stayed in the trade. So if you bought here, bought more here, bought more here, you were able to get out with profit. And that's a big sign of trading range. Even here, we sold off, you buy that low, scale in, you make a profit. So let's say you bought that low. I don't know, it really kind of all depends, Oh, I like this. Let's say you bought the bull low. Well, it doesn't really matter. Point is, bulls bought this low, scaled in, and got out. Anyways, you have to wonder with all the gaps closing that it's probably going to lead to a trading range. Here, sold off sharply, possibly second leg. But the bulls should not have allowed, the bears should not allow this. Point is, looks like the bears got out at break even around the midpoint. You sell that close, you scale in higher, you get out around the midpoint of your midpoint between your two entries. So I think that covers your question. Let me just look at it again. Okay. Bottom of channel started 2300 the previous day. Yeah, you could say it's a spike in channel, and we are testing the bottom of the channel. So the bulls want a double bottom and a measured move up. Wasn't this move strong enough for at least a second push down? Would it be reasonable to give up on the second push down after bar 12? Sell two-legged pullback. I know I could look at bar 12. Well, no, it's just going to be the whatever 930 bar. Yeah. Okay, so would it be reasonable to give up on the second push down after the bar 12 sell, two-legged pullback to the neck belt? Okay, so yeah, I think even if you're looking at the daily, I look at the Globe, not the Globex, the just daily session. Strong enough for more down. Yeah, you could see that. We are at support. We're at the bottom of the channel. Trading range day. If you're a bear, you definitely don't want to see this fall. Once you start to see this micro channel, 1, 2, 3, 4, 5, about a 6 or 7 bar micro channel, you have to wonder, is this a bear trend or a trading range? And let's just put on there we go. Yeah, okay, so this touched the 20 period moving average and sold off. So that's probably a reasonable short. It's not high probability by any means because of this, and it's a terrible, small body, big tails, limit order market, probably buyers below, scaling in lower. So I would think, once the bears see this, their objective is to get out at break even on this close. And as you can see, well, you definitely have to give up on the bear case by this close, because now you're getting the possibility of this, depending on how you draw it. Point is, bears wanted this, but bulls wanted a bull breakout of a bear flag. They closed the gap. It still went higher. Anyways, right here, the bears gave up and were probably always in long. So what this means is there were so many buyers around the midpoint. It's fairly close to the midpoint. So many buyers around here that once it started to go up, bears who sold here and were scaling in gave up on their position. So I believe that covers your question. So yeah, to sum it up, this was the second leg, as weird as it sounds. So yeah, it's reasonable to give up on the second leg down once you see this failing. It's probably reasonable to say that bears would have stops. Since it's right at the moving average, bears would probably have stops above this low 2, so I think it's reasonable to look to buy after that, or at least get out shorts. Alright, hope that answers your question. Let me know if it doesn't. And